Welcome to our Hong Kong Brief program. I'm your host, Jenny. Today, we're diving into some sizzling headlines. First up, Hong Kong stocks took a nosedive as escalating US-Iran tensions sent oil prices soaring, causing regional instability fears and impacting markets. Several local companies saw mixed moves, while major Asian markets also declined, highlighting global ripple effects. Next, Hong Kong's Financial Secretary Paul Chan shared a positive outlook, emphasizing the city's resilience and strategic plans to become the world's top asset and wealth management hub by 2028. Despite ongoing US-China trade tensions, Hong Kong aims to diversify its economy and strengthen its global financial role, focusing on green finance and cross-border services. Finally, Chinese bank stocks are lighting up social media feeds with impressive gains, up to 24%, attracting retail investors and FOMO-driven trading. The rally is fueled by attractive dividends and falling bond yields, reinforcing confidence in the stability of large banks amid economic uncertainties. Please continue to watch for more detailed insights. The South China Morning Post vividly depicts the turbulent ripple effects of the U.S. military strike on Iran, which sent shockwaves through global markets. Hong Kong stocks, already vulnerable amidst geopolitical tensions, plummeted as fears of escalating conflict and potential disruptions to the vital Strait of Hormuz intensified. Oil futures surged dramatically following President Trump's announcement of targeted airstrikes that claimed to have obliterated key Iranian sites, heightening concerns about a possible closure of the strait, a critical artery for one-third of the world's oil shipments. The resulting spike in oil prices threatened to ignite inflation worldwide, complicating the Federal Reserve's efforts to tame rising consumer prices. Amidst this chaos, some local companies like biopharmaceutical Transthera Sciences and Based Health Group saw spectacular gains, while others like Wuxi Biologics and Tektronic Industries suffered declines, illustrating the market's jittery response to geopolitical uncertainties that cast long shadows over the global economy. The South China Morning Post also captures Hong Kong's strategic resilience as its financial leadership, exemplified by Paul Chan Imopa, emphasizes the city's need to navigate persistent US-China trade tensions and geopolitical volatility. Despite a tentative trade truce, Chan warns of ongoing uncertainties that threaten to destabilize markets and economic stability. He advocates for strengthening Hong Kong's financial infrastructure, diversifying markets, and positioning the city as a global hub for high-value supply chain services and wealth management. His ambitious vision aims to surpass Switzerland as the world's leading asset and wealth management center by 2027, leveraging Hong Kong's unique advantages in green finance, cross-border wealth management, and strategic cooperation with mainland China. The city's focus on fostering innovation, maintaining financial stability, and building a robust ecosystem for mainland companies to list and expand abroad underscores its commitment to staying ahead of the fierce competition and geopolitical headwinds. Meanwhile, the South China Morning Post highlights the meteoric rise of Chinese bank stocks, which have captivated retail investors across Hong Kong, Shanghai, and Shenzhen. Driven by attractive dividend payouts, declining government bond yields, and increased allocations from insurance companies seeking higher-yield assets, these banks have surged impressively, defying traditional notions of their boring safety. The rally is fueled by a flight to safety amid China's economic slowdown and stock market doldrums, with state-controlled lenders like ICBC, CCB, and ABC posting significant gains. Analysts point to the attractive dividend yields and the ongoing purchase of bank stocks by mainland funds, particularly insurers, as key drivers of this rally. Despite concerns over narrowing interest margins and lingering economic uncertainties, investor confidence in Chinese banks remains robust, with many believing their dividends and stability will continue to attract interest, reinforcing their position as a compelling yield play in a challenging economic environment. The South China Morning Post reports that Hong Kong is committed to expanding its land bank to support future development, emphasizing a cautious approach to selling land parcels. Financial Secretary Paul Chan clarified that the government's primary focus is on land creation rather than immediate sale to offset the budget deficit, which was initially projected at 87.2 billion Hong Kong dollars but later revised to 80.3 billion Hong Kong dollars. Despite property prices dropping about 28% since 2019, Chan reassured that the market remains stable and interest rates have peaked, suggesting no urgent need to push forward with the controversial Lantau Artificial Islands project. Instead, the government is prioritizing the Northern Metropolis scheme, which aims to transform 30,000 hectares into a vibrant economic hub with a population of 2.5 million, aligning with the Greater Bay Area Initiative. While developers and lawmakers have called for halting the Lantau project due to concerns it could depress land prices, Chan indicated that the feasibility studies would be completed first, and the project would be dealt with later, as the city's land supply is ample for the coming decade. The South China Morning Post also highlights the cultural and wellness philosophy of Panpuri, a Thai brand rooted in centuries-old traditions that promote harmony of body, mind, and spirit. Founded by Voravit Sirapark, the brand offers a sensory escape from modern chaos through its natural fragrances, skincare, and spa products, all crafted with a commitment to purity and environmental consciousness. Panpuri's latest offerings, like the Burnout Antidote Wellness Fragrance Series and Andaman Sales Perfume Oil, are designed to evoke tranquility, emotional balance, and a sense of grounding. Sirapark emphasizes the importance of tradition and innovation working hand in hand, creating products that resonate emotionally and serve as tools for self-reconnection. With a global presence in 15 countries and recent investment from Japan's Coase, Panpuri aims to expand its boutique network and deepen its storytelling, blending Eastern wellness philosophies with modern luxury to meet the emotional needs of contemporary consumers. The South China Morning Post reports that Zhejiang Sanhua, a leading Chinese manufacturer of heating and refrigeration controls, experienced a subdued debut on the Hong Kong Stock Exchange amid a cooling IPO market. The company's shares opened at 20 Hong Kong dollars and 95 cents, below the offer price of 22 Hong Kong dollars and 53 cents, and closed down 7.2%, raising 9.3 billion Hong Kong dollars. Despite overwhelming oversubscription, 747 times among retail investors and 23 times among institutions, the market sentiment was cautious, with many investors rushing to lock in profits, partly fueled by the easy access to margin loans that inflated oversubscription rates. Sanhua, established in 1984, is a global leader in its field, supplying components to major electric vehicle brands like Tesla and BYD, and plans to use the proceeds to expand R&D, enhance manufacturing, and improve supply chain localization across China, the US, and Germany. The IPO attracted significant cornerstone investments from firms such as Schroders, GIC, and Myri Asset, reflecting confidence in the company's long-term growth despite the short-term market hesitations. According to South China Morning Post, Hong Kong's aviation industry is experiencing a remarkable renaissance, perfectly timed with Chief Executive John Lee Ka-chiu's political milestones. The city's global competitiveness has soared, with Hong Kong ranking third in the World Competitiveness Ranking and its flagship carrier Cathay Pacific reclaiming a top 3 position in Skytrax airline rankings, receiving accolades for in-flight entertainment and economy class. The Hong Kong International Airport's jump from 33rd to 6th place in the Skytrax World Airport Awards highlights the city's resilient recovery, driven by strategic partnerships and government support, even as it navigates geopolitical challenges. The airport's expansion plans aim for 120 million passengers annually by 2035, with recent growth signs promising a strong outlook for 2025, fueled by the vibrant summer travel season and a resilient Lion Rock spirit that continues to underpin Hong Kong's business and tourism sectors. Nikkei Asia reports that China's biotech sector is experiencing a pivotal DeepSeek moment, marked by a surge in international collaborations and multi-billion-dollar deals with global pharmaceutical giants. Pfizer's $1.25 billion upfront payment to Chinese biotech 3S Bio for an anti-tumor drug exemplifies this shift, alongside BioNTech and Bristol-Myers Squibb's joint $1.5 billion deal. These agreements focus on innovative oncology drugs like PD-1 VEGF bispecific antibodies, which are outperforming established therapies such as Merck's Keytruda, signaling China's rise as a global leader in biopharma innovation. The sector's revival, fueled by years of government backing, venture capital, and scientific talent, is reshaping China's pharmaceutical landscape, moving from imitation to first-in-class drug development, and attracting increased foreign investment. As China leads in oncology clinical trials and global licensing, multinational companies are racing to acquire Chinese assets, recognizing the country's capacity to produce groundbreaking therapies and the importance of international collaboration for future growth. South China Morning Post highlights the surge in Hong Kong's hotel investment market, driven by distressed assets and a recovering tourism industry. Investors are capitalizing on opportunities to purchase undervalued properties, with transaction volumes reaching around 5 billion Hong Kong dollars, nearly half of the city's commercial real estate deals last quarter. The influx of capital is motivated by the rebound in inbound tourism, which increased by 9% in the first quarter, and the strategic conversion of some hotels into student accommodation to address a growing demand for beds amid a supply shortfall. Despite high interest rates and mixed tourism figures, Hong Kong remains attractive due to its status as a secure financial hub and its efforts to boost tourism through infrastructure projects like Kai Tak Stadium. The market's optimism is tempered by challenges such as declining average room rates and occupancy, but the city's resilient reputation and government initiatives continue to support a positive outlook for hotel investments in the near future. The South China Morning Post reports on China's women's volleyball team, which displayed resilience and skill in their match against Italy, the reigning Olympic champions, at Kai Tak Arena. Despite a strong start that saw them push Italy to the brink in the first two sets, the Chinese team ultimately fell in three, with the third set showcasing their fatigue and the Italians' relentless teamwork. The match drew a crowd of over 10,000 fans, with the event highlighting the sport's popularity in Hong Kong, even as some games experienced lower attendance due to weekday scheduling. Italy's perfect record in the tournament's first two legs underscores their dominance, driven by disciplined practice and focus, as they aim to defend their 2024 crown. The South China Morning Post also highlights Hong Kong cyclist Cici Li's remarkable psychological transformation, which has propelled her to claim double titles at the National Road Championships. Her coach, Hervé Degorn, emphasized her mental shift, noting her aggressive approach and personal best in the time trial, despite challenging wet conditions. Li's victory in the 15-kilometer time trial and her consistent performance in the road race marked a significant milestone, reflecting her increased confidence and determination. Meanwhile, concerns about the depth of Hong Kong's cycling squad and the need for stronger leadership were voiced, alongside plans for upcoming competitions, including the National Games, where Hong Kong athletes will compete on a broader stage. The South China Morning Post reports on the emerging competition in the plush toy market, where British monster-like characters called Fugglers are threatening to rival Hong Kong-designed Labubu. Created by UK artist Louise McGetrick and distributed by Addo Play, Fugglers are characterized by their funny ugly appearance, with human-like teeth and vacant eyes that evoke a disturbing yet intriguing aesthetic. Their recent surge on social media platforms like Rednote, with millions of views, has sparked debate on whether they can dethrone Labubu, which has enjoyed massive popularity since its debut. Experts warn that the collectible toy market tends to be short-lived and advise investing in new ideas, as social media-driven trends create fleeting communities of enthusiasts. The trend underscores how social validation and community belonging continue to fuel the appeal of collectible toys, even as the market remains highly volatile and subject to rapid shifts. South China Morning Post highlights Hong Kong's rich tapestry of Art Deco architecture, revealing a city where this distinctive style is woven into its urban fabric in subtle yet captivating ways. While Shanghai is renowned for its grand Art Deco skyline, Hong Kong's contribution, mostly from the late 1930s, offers a more understated elegance. The article vividly describes the Kadoorie Hill neighborhood, where sleek, aerodynamic Art Deco villas and apartment buildings, characterized by high ceilings, expansive windows, and decorative motifs like chevrons and sunbursts, evoke the glamour of the 1930s. These structures, crafted from modern materials such as concrete and steel, reflect a shift away from Victorian ornamentation to a focus on cleanliness, light, and space, influenced by post-World War I hygiene ideals. The neighborhood's lush gardens, palm-lined streets, and the mix of private and community residences create a secluded sanctuary that has attracted the city's elite for decades, with properties now fetching millions. The article also recounts the history of the area's development, from early plans inspired by British Garden City ideas to the influence of Shanghai's skyscraper boom, emphasizing Hong Kong's unique blend of style, privacy, and urban sophistication that continues to charm residents and visitors alike. The South China Morning Post also reports on a series of 3 car crashes on the Fanling Highway near Taipei, which resulted in at least 7 injuries, including a 10-month-old baby. The incidents occurred within minutes of each other, starting around 4 p.m., with dash cam footage capturing the chaos: 2 cars halted on the shoulder, a third losing control and spinning out, and subsequent collisions involving separate vehicles. The accidents created a dust cloud and smoke, temporarily shutting down part of the highway before reopening it shortly after. Emergency services transported the injured to local hospitals, with the injuries described as minor but concerning enough to warrant medical attention. The recurring nature of the crashes at the same spot underscores ongoing safety concerns on Hong Kong's busy highways, where sudden control loss and high traffic density pose risks to drivers and pedestrians alike. This series of incidents serves as a stark reminder of the city's traffic challenges, highlighting the need for improved road safety measures amidst the bustling urban environment. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Waking up to wonders, tech and nature blunders. Got our rockets flying while the oceans are sighing. Lasers